How to get a business loan with bad personal credit, even if you have good credit, perhaps no collateral, or you do, and you're wondering, how can I do this the fastest, simplest, and easiest way possible, hassle-free, from the start of the application to the meat and the potatoes, which is the underwriting, to the closing, and then you getting the funding, and then you can move on, continuing to build, grow, expand, and even get out of a tight pinch. I'm also going to go over EIDL updates, PPP, employee retention tax credit, a few things on grants, and quite a few more things on expert business loan broker tips that I have for you. And that's who I am. If you're not sure about, my name is Michael with Viral Funding Solutions. And again, I'm an expert business loan broker who's been fortunately and very grateful to help a lot of businesses get business funding. Alternatively, what they understand going to the bank physically, an online bank, private lenders, non-private lenders, business credit building, credit repair, and all different opportunities you can think of. I also run other businesses, but this is my primary focus, if you've heard me say that. And again, I've started specifically in certain niches and and then I expanded and I fund all of them literally. And I've gone to this point because I focused and then built the foundation correctly and then been able to help a lot of businesses over time. And I'm saying this so you have an understanding, not in a people think cocky kind of way. I'm not like that. That's not my character. I've never been that way. But I do have a lot of confidence and certainty in what I do and how I can deliver. But I'm also going to leave this open for frequently asked questions. Why? It is Friday, September the 2nd, 2022. We're in the new month. Friday. I want to take things a little slowly today because everything up until today has been rather productive, busy, blog content, video content, social media posts. So what I'm going to open up to in a second is let you guys comment. And you can do that at any second, and I'll get to your guys' comments in a moment. But I want to get into how do you get a business loan with bad and even good personal credit. First and foremost, what you have to understand is if you're coming to the table with less than a 600, even just above 600, less than 700, and you can say 600 to 700 is better, but if you have bad personal credit, that's going to limit you from getting funding anywhere else. And we still have to bring into play cash flow, revenue, monthly sales, average monthly revenue, lowest monthly revenue. We're looking at bank statements within the last 3 to 6 months. And you also have to factor in your industry, your time in business, and a multitude of things, especially when we go into underwriting. And I gather the information myself before I send it over to the lender. And what I do is I will pre-underwrite your file. I know through experience what happens in just about every industry. I've seen every scenario coming in, people getting funded, those who didn't get funded, why that was the case. Maybe it's a credit issue. Maybe you have some bad reporting, negative trade lines. Maybe there is something with your credit history that's not letting you go forward. So with that said, it'll limit you from options. So yeah, you can't get an SBA 7A 504 type of loan because we're looking at least a 680 and above FICO credit score. In some cases, you can say 660 or 650, but you better have strong cash flow. And I'm not just saying you better meet the minimum of 400 to 500,000 Northwood of that in an SBA loan. You have to have stability in cash flow and history, especially when we're looking at tax returns. We're looking at year-to-date financials, profit and loss. So it's not to say you would have qualified for that SBA loan option because we still have to look at the outside of the FICO consumer credit, we still have to look at business credit. That's the other question. You're limited if you don't have business credit established. Now, if you have the two, great. One is doing more better than the other, then yeah, that's another stepping stone. But then we also have to look at cash flow. What are you doing there? Do you even meet our certain requirements to qualify for certain funding? How about time in business? So these are just a few of the many things on the upfront. So how do you get a business loan with bad personal credit will depend on how bad your actual personal credit is. What is their credit history telling us? And if you have bad personal credit, but you have strong cash flow, you have stronger average daily bank balances, it doesn't have to be that strong, but your revenue is like high enough. Like I have certain business owners right now, for example, who are qualifying for 200, 300,000, less than that, 100,000, less than 100K, and above more than 300,000 because Yes, because they have strong revenue per month for the last 3, 4, 5, 6 months. It's stable, and it isn't like if it has to be completely 100% stable, but you're making up the fact with cash flow. And so that's what these products and these services look for, is how will you be able to service the debt with your credit score? The credit score is not going to do a thing. However, it does show us how you're making your payments. When are you making your payments? What's your actual history and your pattern with that? So if you're strong in cash flow, and that could mean cash, ACH, wire, electronic transfers, quite a few more things with different deposits, then that can help override and look at a low like 550, 600 FICO credit score. If you're even at a 600, we consider that low. Anything underneath 680 or 700 below, we consider that to be a fluctuation in credit. You may be taking on a lot of personal credit. You may be not making your payments. Sometimes you are, but you're making this mistake of going back and forth with this. And so it's limiting you on getting the amount of funding here because you're taking on too much debt here, the way you're making your payments, what you're using that debt for. So there's a lot more reasons that we're looking at your credit. And it's not always the primary factor for getting you funding with bad personal credit. So it's not like you have to have a 650, 680 and above with alternative lenders. You can get in with as little as a 500. But when I say 500 on your personal credit, what they want to see a lot of the time is at least you doing 15,000 plus per month in revenue, and consistently if you're depositing 15,000 and above, and revenue 15,000 and above. And that can be for the last 3+ months consistently, not just 1 month of 15, another month of 10, 5. If that's the case, then you may be having to come low to a lower tier lender in a lower tier service. Now, if you have 500 and above in a 500 plus FICO, but you're doing 15,000 and above, then that's better. Sometimes it's 20,000. In other cases, people will say you have to have 30,000 or 25,000 deposited. It just depends on the type of service. But with like these cash advance products, what you should be aware of is you'll follow a lot underneath these types of services. And what they are, you're paying back with your future receivables. So whatever you're making in sales in the future, you're paying back to the merchant, or in this case, the lender is receiving the ACH. When you're getting deposited, they're able to get the money when you're making it. And that's how it works. You agree to an ACH usually. So don't be surprised if that happens. It's very normal how they're going to collect their money. What are they going to mail them it? Or when you're done, you're going to finally pay them your debt? That doesn't make sense. You don't do that now with other services. So what they're looking at is, hey, does he have sufficient enough cash flow? If he has a lack of credit, well, how bad a credit is it? Is it above 500? Yes, it is, but is it enough to take a risk on it? Does he have a bad pattern, a bad history of it? And it can drop in the next month to about 480. We don't want to always see that fluctuation. So if you're above a 500, great. If you're stable in cash flow, you're even going up, you're projecting, it's even better. And that's how you look at it. And these cash advance products, by no means are they going to be inexpensive. They're supposed to be medium to higher rates. So you're looking at somewhere between 19 to about 70% and above. So a lot of the times it's between 19 to 70%. You'll get rates of like about 1.19, we call them factor rates, total paybacks in other ways. So 1.19 to about 1.69. You're going to get the highest risk if you have lower revenue. If you're doing 5,000 and above and less than 15, you're already going to fall in between that. Like 1.19 to 1.69, more about 1.4 to 1.69, 40% to 69%, or to round up 70%, because you're higher risk. How are we going to lend you a lot of money when you're only doing 5,000 plus per month, less than 15,000, and your average daily bank balance considered, your history? How are we going to give you like the 200,000 you're asking for, only doing 5,000 minimum? 8,000 minimum a month, and you're wanting us to give you 200,000 that you have to pay back 270, 230,000? How's that going to happen? So what I tell individuals is have an open mind, one, and then two, please give me feedback. Like, I'll communicate with you how this all works. And if it surprises you, that's okay. I'm not going to be surprised myself. Nobody has educated you probably on this. Like, I spoke to a business owner the other day. He's looking for acquiring a franchise that has less than 2 years established. Now, if he had 2+ years of an established franchise, then we could look at perhaps an SBA 7A business acquisition. However, because he doesn't have the businesses in 2 years over, doesn't have at least 2 or 3 plus years of tax return history. And we have to consider how much business credit he actually does have established. It might be just enough with DNB and not the other few, because we have a lender or two that can help. But everything was fitting except that. So what I'm doing is I had to communicate with him this other product that I have where, hey, it might be a merchant cash advance and the rates there are from about 19 to 50 or so percent. And he goes, whoa, who would want to take one of those? And I said, somebody who has the benefit exceeding their repayment. So if you're going to double, triple, quadruple your income, it's probably going to also increase your profitability. It's a no-brainer. So if you're taking on $20,000, you're paying back $27,000. Well, you're going to be making double the amount you started with, or you're probably doing around 15 to 18,000. You say you're going to get 40,000 in the next 2 to 3 months. You're projecting that, so you're paying back 27,000 on 40,000 you made, and then you're continuously making 40, or you're continuously doubling, or you may have a lower month one day or 1 month. So the purpose of it is to fuel growth and expansion. It's not primarily used for relief. It's not used to pay off all your debt. 80% of it going to debt, 20% going to growth and expansion. And on the other side, you think about it wouldn't benefit me. I wouldn't be making enough money from this. I put $1 in, I only get $2 out, and that's quite a bit. $1 in with $3 out, that does better for me in my marketing or advertising. So I can assess that and take that type of risk. And I'm going to apply it for other uses, for inventory. So don't come to me with this like, well, somebody else told you. If you come to me with that, I'll make sure I set your beliefs different, because a lot of business owners or people out there go, well, these high price, medium to high rate advances out there. And well, you didn't understand what you were getting yourself into. Somebody didn't communicate to you how these work. So you're not getting the right context. And I'll get into the comments in a moment. Appreciate you. Please keep tuning in. I'll answer it in just about a minute or two. So with bad personal credit comes the risk of taking on these cash advances, merchant cash advances, or untraditionally you hear about a hybrid cash advance, which is one that I work with, which is one that I actually recommend over a traditional. It gets you 50% less expensive. It helps you with your rates, your terms in ways, more flexibility. You know what's being taken out of your account. Yes, they are these daily type of weekly repayments. So if you have bad personal credit, what are you complaining about? What do you mean? You wanted a monthly repayment? You can qualify for that. We can't even trust you enough to get you a monthly repayment. A lot of people default on those. You may be already taking on a lot of rent, credit card payments on top of more. Oh yeah, so you want an additional $3,000-4,000 on top of that to your $6,000? So you want to be paying $10,000 to $12,000 per month at the end of the, how realistic is that? You can't even afford to pay what you're paying now. You're struggling to even make it to the end of the month. You're going to have to close your business. Oh, you're telling me about closing a business and you're making a huge lump sum monthly payment of all this combined, and you want an additional $3,000 to $4,000 at the end of the month that you won't be able to pay back. So you default. All right, go ahead and default. You default, guess what happens? You can never receive funding again in the industry, period. No exceptions. Yes, there's one lender out there who will say, I'm going to have you pay this off in 30 days. I'm going to give you maybe a minimum amount. Better pay it back to me in 30 days at probably like the worst terms, worst rates, better pay me back. And then that's where you build a foundation and you go, okay, they paid me back I gave them $7,000, they paid me back $18,000, or $7,000, they paid me back $15,000 to $20,000. Well, they were proven to do this in 30 days. Next time I'll give them more. I'll give them maybe double that. I'll give them $14,000. Now they're paying me back less. Maybe they're paying back $22,000 or so. And then this time around, you're growing. They maybe are more flexible to give you terms and rates, but you guys don't see that. I have people right now who disappear, who go, well, that's not enough money that I need. I wanted $30,000 for payroll and I needed $40,000 for this, but you have to start somewhere, don't you? Would that $7,000 benefit you? Well, it'll hurt me more because of my cash flow right now. Currently, okay, then it doesn't make sense to take the funding. Go stack up credit cards. Go figure out how to do this credit line hybrid program that I have recommended to you. Go get into business credit building, which I do myself. I do all these things. So if you're not doing it, then what are you going to complain about coming back a month later saying, well, I want to get different results? Just because you raise your revenue doesn't mean you're going to get exactly different results all the time. How are you doing? You're looking for a $500K business loan. What type of business are you in? And what are these funds going to be used for? So while you're answering that, that's just the gist of it, guys. Bad personal credit, you're limited on services. Good personal credit, we're getting higher into the 600s. And that's what we want to see. To get 625 and above is realistically what I'd like to see. At 650 and above, cash flow wise, you can get in with 5,000, 15, 20,000, 30,000, but there's different tiers to it. And if you have, like I said, good credit, it opens up more doors, more funding, more rates, better terms. Instead of getting these 4 to 6 months, maybe you're at 7 to 11 month, maybe you're 12 to 24 months, or from 12 to 36 months. And it just depends on what your use of funds are for. So does it make sense for us to give you all that time? You do qualify for it, but we won't. Where you qualified for 12 to 24 months, all you needed was 12 months. You didn't need 18 to 15 months, and there's more of that. We go into it. Awesome. Appreciate you for being specific with me. You're in the construction industry. Nice. How's business been going for you? What's it looking like too for the rest of the year? I deal with a lot of construction businesses, and what I want to ask you first, you don't have to answer me this because this could be confidential information. And what I recommend, and anybody else in here watching, in the bio, if you haven't yet, I have a questionnaire form. It's something you want to fill out. It will then land in my email. I will then evaluate it, analyze it, and then give you a proper response back via email. I'll be working tomorrow, so maybe I'll work on your file then. But I'm not saying exactly there's more people. But if you fill that out, it'll land in my email. I'll email you back on your best funding option and options. And a lot of people today are like going hammer on it. They couldn't do it yesterday, so now they started their applications. Like I have a business owner now looking for 600,000, which is my next question to you. Okay, you already said 500K. I apologize for that. But 500,000 is what you're looking for, and it's just a question of how you're doing and performing revenue-based wise on month to month. For payroll 2, expanding in company, R&D, first stage of 2 development projects in the works. Nice. I like that you have already a set plan, which is helpful for our underwriters. It's like when people come in, I see it a lot in construction too, where they come in and they don't know exactly what they need it for. They just want the money to sit there. Well, then a line of credit probably would have been best, or that on top of a lump sum. And you just started in 2020 of December. Every year you've hit 1 million in gross revenue. Awesome, great job. Congratulations on that. And I know that's quite a feat to achieve. It's easier said than done. And there could be a lot of stuff that happens in construction. Crazy how, yeah. The housing shortage and price surplus, seeing that. So we have been staying well above water. Nice. I love that you made that point, because I always say this. If you're looking for survival money, I'm the guy, yes, but I can't help you survive, right? I can't always save you from bankruptcy, foreclosures, on UCC liens, the ones that you don't want. But what I do say is you're in a stage where you can look for growth and expansion. You know what you want to do. You have a plan because you looked at your year-to-date financials, your profit and loss, right? Every business owner, you and I do this. We look at our profitability. We look at our expenses, our net operational income, net income. We look at our cost of goods sold. We look at all the expenses that I've acquired. Where can we kind of quote unquote trim the tree and slim it down where we're being more profitable while we are probably raising our expenses at the same time we're raising our revenue. And so I just spoke with the business owner. He didn't get that we're not approving you for an SBA 7A loan. You don't have 2 years of profitability, at least recently. Maybe it were 2, but it was 2019, 2021. 2020 wasn't profitable. It's kind of hard when it's recent history. So my thing is with construction is the depositing. So you're doing well above water. But another question of mine is just, you don't have to answer this and you can fill out the form, but it's the amount of deposits you're making per month. Every construction business is different. However, I see one deposit of 100,000, 200,000 a month. I go, what? You want to be depositing at least 3+ times per month. If you can, 5 to 7, at least 20 days usually in a month, the better. If you're depositing consistently weekly, every day, I get that's not the case because of how you get paid with your contracts, what kind of bids you have. And a lot of construction businesses have those extra contracts, but it's when they're going to be fulfilled on. So a lot of people come to me and tell me, well, I have a company that we're going to go and work with and do this, but they're yet to do this with the contracts and we're not sure about when we're going to get called. So that's a little scary at the same time if there's nothing concrete. But I can definitely help you for payroll, expanding your company, which I appreciate you saying that again. R&D, you're in the first stage of 2 development projects in the works, for sure. And then you just started in 2020, which is most recent. Maybe it's not a form of an SBA 7A loan because of your recently starting in 2020. So just a heads up. Every year we have hit 1 million though in gross revenue. And I did see that, what you said there. And yeah, you're right. It does vary. Yeah, you absolutely want to have full control of the process. The more control you have in your construction business, ultimately the better you're going to be off. And then it's in the construction industry more than anything. There you go. You're developing the whole house. So that's something that I can help with. Since you're in the construction industry, are you rate sensitive or like term sensitive? Like, would you rather, I get everybody says, yeah, I want a lower interest rate. Of course, that's no brainer. Longer terms. Are you willing to go just the revenue unsecured financing route? Do you have maybe perhaps a ground up construction project? I'm helping out one person right now with the ground up construction project, land first. And then secondly, they're doing the ground up construction where they're going to be building like a gas station. So I'm getting that in the works. That's about 2.5, 3.5 or so million worth and more. But I can definitely help you. Right. Instead of just being the guys building for other homeowners. Yeah, I understand how you work. I've had this situation before. I already have it right here. I know what you're getting at. I've had this situation before. So I totally understand you. I know where you're coming from too. I have friends and family who are in the business. One of them I just recently spoke to. He's doing similar works. And, he's telling me all these different things and similar to what you're saying. But again, it's in the bio. And if you're looking for that amount, you can put it in the questionnaire form that I have. Just list that you are looking for 500,000. Let me know, like in the additional notes, like, and it was your name Epluri? I'm sorry if I'm saying it wrong. So I see your file come in. So I want to make sure when I see the file that I can recognize it and go, hey, that's okay. Now I'm going to move you to the top. Now, if you submitted something, and I'm not quite sure whose name that is here and whose name was that there, it can be a little bit off. Got it. Yeah, 25% ROI estimated in the Bay Area, California. Nice. Yeah, so you already have that working for you. But that is something that I work on too. I'm not going to get into the whole, I know always people want to ask me like, what is the details of the ground up construction? That can be for a later time. And I can communicate that with you on how it all works, if that's another direction for more projects. However, for your construction company, if you're looking for that amount of funding, do you want to offer up collateral is one question to get lower rates. If you have the collateral, if it's unsecured financing, perhaps we can get you a term loan, maybe an online bank term loan of about 1 to 2, 1 to 3 years, sometimes 2 to 5 years. But we just have to recognize what you have. The online bank term loan isn't always the most attractive solution because you still have to be a highly qualified applicant. However, there are other ways that are unsecured with 1 to 2 and even 1 to 3 years with about 1 to 3% interest per month. So like I said in this video, the benefit, what are you doing? ROI, I see that there. What are your other ROI potentials if there's more? And what would that revenue do on a month-to-month basis? We always want to help you go upwards, not backwards, or just stay the same. And those may be attractive solutions to you. But again, until your file comes in, I will then be able to have a better understanding. And I won't be asking you all those questions here, so don't worry. I'm not going to start asking you your FICO, your lowest monthly revenue. And my questionnaire that I put together myself, it's in there, and I'll help you out. Anybody have questions? I'm done talking about the bad personal credit. I could go on for hours on that subject, honestly. I can go even deeper, show you on screen, which I do on the YouTube channel. So for those of you who are not familiar with it, I have one of the fastest growing YouTube channels out there on the market. This is because of you. This is why I show up every day to create the value that I do. And I really want to make sure that I give you guys impact more than anything. It's not about the money to me. Yeah, it's a business. I get that, whatever. But that's exactly what it is. It's like, yeah, that's on the other side. My first part is You as a human, who are you? Like, you're questioning me. You don't know me exactly personally if you're watching me for the first time, but I'm going to question you. I want to know who you are. I want to know what you have going on. Even how's family doing. We don't have to go too deep because I'm an introvert too. I don't always open up that much. But I want to get to know how you are up here, how you're doing in here, literally how you're doing here, how you're doing spiritually in all areas, because your health is your wealth. I know that sounds cheesy, but what you project yourself as is going to be projected into your business. So what I see in a lot of business owners, I'm not saying you guys are, I see a lot of character flaws. I spoke about this yesterday briefly. I have business owners who go out of town, and I told them, like, this is how it works. Don't just leave me in the dark. And so, sounds good. Here, I can, it's in the bio. Oh, you don't see it? Sometimes, I don't know why TikTok's doing this, and they put me some compliance stuff. I don't think I'm breaking anything. It's just, like, I'm creating good content, and it's just, they're seeing it as uncompliant. But here, let me, how can I do this the best way without getting away from this? So I'm actually going to have you go to my site. So if you have your browser, or you can write it down. Yes, that's what I was going to get to. It is viralfundingsolutions.com. So again, viral, something goes virality, fundingsolutions.com. And make sure you find the right one. I mean, there might be another one called Viral Fund Solutions. I don't know. Sometimes you might think it's that one, but it's not. So mine is viralfundingsolutions.com. Usually is the only one listed there. And then scroll down when you're on the homepage and click on, and go underneath where it says how it works. You'll see how it works. And then after those 3 steps, click on the little button and it'll take you to my questionnaire form. I could have just given you guys a link here, but sometimes it doesn't appear or something like that. But yeah, viralfundingsolutions.com. Click my link to get to my homepage. Scroll down to where it says how it works. And then click on the button right underneath the 3rd step. And then you'll be able to see the questionnaire. There'll be a brown background with a full set of questions. It could be a little in-depth. And it's like the best questionnaire out there, guys. Like, if you guys are thinking this is a little long to fill out, it's well worth your time. Trust me. So, okay. Let me answer this question over here first. Is the SBA 7A loan long? Yeah, of course. It's all long. The thing is, when you're dealing with high documentation types of services, you will, especially a 7A, out of anything, you're going to be continuously asked to supply more documentation if it's needed. Like a personal financial statement might be asked in the beginning, or it might be asked somewhere a little bit in the middle of it. We might ask for some kind of an agreement. Maybe something happened in your taxes that didn't get reported, so there's an extension of that, like I have a lot of business owners doing. There could be quite more at closing, some extra proof that needs to be added. So it can take about 6 to 8 weeks or so to receive your funds. I'd say it could be a month. Month being that you supplied all the documents when asked for in the beginning, but also when we reached out to you, we're like, we need this. You sent it like that. You sent it the same day. But a lot of the times you're seeing like 6 to 8 weeks, even above 8 weeks. You're seeing like the 3-month frame in some cases, and it can even be pushed out because of everything happening right now with the SBA. You got the EIDL, but it's close to being exhausted. Well, it pretty much is exhausted. Like when I say quote unquote exhausted, I mean, when I say that, it's they have some stuff in the tank, but have they released it? That's a whole nother question. I don't understand. What meeting? Oh, you're thinking because I was addressing him for most of the conversation. Well, if you just tuned in, I can see why you thought that. But if you had been here for a little bit, I mean, you would know that without questioning that I was trying to get some points across. And that's nothing bad. You're welcome. I like how you responded back to him too. We don't need one. That's how it works in the business loan broker space for a multitude of products. It's different than the mortgage space, insurance, Perhaps in the future, I could see it go in that direction. That's just how it works, because a lot of this is commercial lending, even in real estate financing and in other ways. So this is how it operates, and it's a whole different dynamic. And it's just, you have to be careful about it, because there's so many people out there. Like, I have a lady right now who's like, I got approved with Cabbage and I got approved with this and this, but I went to your lender or this person and they didn't approve me. And I have the underwriting details. I just can't say it to you guys. She knows about it. And I can't disclose more information to her because my underwriters don't want me to do that. She has the idea. However, it's different when you receive an offer from it being actually funded. Oh, did it? Try it again. Backspace. Let me see if it came through first. 1 second. No, it hasn't come in yet. I don't know. I've never seen it glitch before. I don't think anybody's brought that problem. Only once or twice, but I fixed it. And I can try it again. But the URL you should be on, and I know you were there. It should say my domain, and then it'll say business loan form right next to it. So I'm going to look at it right now. I may even just type it in myself, and it'll be different because of after cache and all that. However, let me type my stuff in. So yeah, just be careful about who you guys turn to. I just saved a lot of people right now a bunch of money on their car insurance by switching to Geico. I'm kidding. So let me type in the rest of this. And I'm telling you, a lot of people are, if you want the best, again, you're working with them. And I'm not saying that, again, to be, it's a confidence thing for me. It's not a, if you think of it negatively. Let me type this in. Oh, are you? So the reason why you're looking for alternatives is because the way the construction company is structured. Got you. Yeah, that's a common reason. I get that all the time too. That and a bunch of more reasons. Okay, so let's see. All right, let's see if it goes through. Yeah, mine went through, but you might want to try it out again. And what I'm going to do here is, because it has a, now that I'm on this page, I want to lower the character count on my additional notes. So I'm going to go in there myself. And I'm going to do this edit very quickly. Right. Yep. So it works. They focus on personal income and credit to make the decision. Yep. I know how it all works. Been there. And I have a lot of clients as well. I hear that. It's unfortunate, but hey, this is why you have the alternative lending field. Now let me come back to this and click the edit with Thrive Architect button. Like right now, we had a real estate investor, or I would say more of a builder, but operating as a sole proprietor, getting an SBA loan of about $400,000 to $500,000. He could have received more of about $700,000 to $800,000 with about 25 years with real estate. Without real estate, $400,000 about $500,000. Let me go back to my. I gotta update this. Yeah. Hey, that's pretty good too. In net. Awesome. That's actually a really good number, I'm gonna be honest with you. And so, considering the industries. And so, yeah, with that said and done, it isn't that black and white like you think. Like I said, I had to shut down a business owner. This is an SBA loan we're talking about. This is government funding backed by a bank. And they didn't have the profitability. I saw their reports and I said, no way my lender's going to see this. So I had to reroute. He already told me, and I asked them, and they saw the material, so I was going into it thinking they were profitable. But when I checked that profit and loss, when I checked those tax returns, boom, killed the deal. So I had to reroute, and they're looking for unsecured financing. So it might be a situation here where we can help you with, maybe a line of credit on top of an unsecured term loan. Those would be a combination. Would it be helpful for you to say, hey, I got a line of credit and maybe it didn't give me everything I wanted, but I got also a term loan. Would that be a route you're open to? And what I always recommend when I ask that question is always like, hey, yeah. And the reason that is because if you're more open-minded, the better. But when somebody closes their mind off and goes, well, the thing is, you sometimes have to get creative with how much funding you get. Like I said, this other individual who's acquiring, who's doing what was he doing? Not the land and the gas station, which I'm helping them right now. But I have a business owner acquiring a chicken franchise, and he has to go the personal loan and the business term loan route together to get the amount he's looking for, and he has about 150 to $200,000 down payment. So that helps out a lot. He has superior credit. He can't get an SBA loan because of the franchise's recent establishment. So I'm gonna upload this really quickly. And again, I'm always following up. I broker all this stuff. I look at the underwriting, and I know what's going on at every step. Looks like a lot of people just came in and out. Others wouldn't even answer back. So you get that from time to time. When people get an answer they don't like, it's more common that they won't respond or stick around. So let me come into this. But if you guys have any more questions, please feel free. It's been crazy. How's your week been? Yeah, try to fill it out again. I'm actually on it editing, but I'm doing an edit for the additional notes section because I have a lot of character count. So if I go here, I wanted to drop this. Yeah, so we can get this going right away. If I can get your questionnaire done by tomorrow, that'd be great, but I'm not going to say it will be. Hopefully the earliest of next week, if so. But I'm going to go ahead and look at it when it comes through. I'm over here on my character count. Oh, I see why it did that. So now let me go into this dashboard. And there's a huge difference when you come through me because I don't want to get into the bonuses, but I give bonuses like I don't want to get into it. Just know that you're in good hands. I hear you. I'm rocking with you. Same. My week's been productive, too busy. And I think we both know what those two things mean without saying anything more, right? Productive and busy. And we usually tend to say it with a smile on our face, but a lot of the times I can say it more seriously. It's just, oh man, I don't want to get into specific details, but it's been a long week. So now let me edit this one here. I'm going to my additional notes. Yeah, that's the reason. Okay. I had adjusted that character count. So I'm split testing my forms. You know this, when you're iterating something new. With me, I have also a digital marketing background. I started a digital marketing agency, grew that, got into affiliate marketing around the same time as I was growing that. And then I got into e-commerce a bit. So I have a couple of affiliate marketing businesses on top of what I did digital marketing agency-wise, but I kind of outsourced that and moved it away so I can focus on things like this. But just know that you get a lot of material from me. If you get funded through me, you're going to be well taken care of. And I'm not only talking about marketing material and all this information that's already done for you, because I have courses I created on Facebook, Instagram, all these different topics, SEO. But let's just say if you want to take more time off for yourself and your family, I got you. Something I can offer for, pretty much expenses paid. So over here, I'm going to just exit out of this, and that's taken care of. So let's go to the comments. Hi, Michael. How are you doing? Hi, Mr. Me. You need cash for expanding your business? What exact business do you run? I was about to say, hey, your form came in. I clicked the email and it said my first and last name because I was testing it. Yeah, but I have my email open, so if you have time to do that, I can get it here. Like I have a whole list of them. Like if I go, I'm literally like flooded with these, and for good things because I back up with my results. I back up what I say with what I do, and so I do all this. When you guys don't see me when I'm not here, I'm like the first 4 to 3 hours earlier, I was working hard. So while you're writing that or not, if you're looking to expand your business, as I've already mentioned here earlier, in the bio there's a questionnaire form. Fill that out. It's the first button. Or you can go to my site. Let me try to write it down right here. I see one form coming in. I'm going to check that in a second. That might be yours. So if you guys can see the comment, if not, sometimes you can't. It is viralfundingsolutions.com. Ah, there you are. I'm speaking with Baron. Appreciate you. Thank you, Baron. It's right here. Okay. I think you already know where this is going towards. Let's see. Yeah, no worries. Like I say, sometimes just estimate it. But what I will tell you, it could come down to like a credit decision. I think you know what I'm kind of like. I could already see this, and I kind of know a range of funding that you could qualify for with what lender or lenders. So I have a better idea. And just so you know, construction/real estate. If you were looking for a lot more, because usually you get lent between 10 to 15% of your annual gross sales. So with that just being said, I mean, you could do the numbers, I can do the numbers, and I have to look at more within the bank statements. But getting you the amount you're looking for, at least the first time around, I mean, that will be a bit difficult unless you had collateral. But what you want to do is if it's unsecured financing, is you start off with one or two products if possible or more, and then you want to build your way up. So when you get in, you're going to have a relationship with myself. You have a strategic partnership and the right roadmap that I set people on. So if you say, okay, well, I can only qualify, like I'm looking at this and I'm saying, unless you had collateral, unless you had a higher credit score, unless you had some, business credit established, your lowest, your average, they were higher, a little bit higher. All that together being said, I'm looking at, can you? Okay. And so I'm looking at, and you may want to avoid this. There might be a cash out refinancing situation because a lot of construction business owners do this. But if it's more about, can you offer a form of real estate and equipment to back that up? Accounts receivables, unpaid invoices, equipment, inventory, which maybe is not the case. Construction a lot of the times. So if you didn't offer up that kind of sufficient collateral, and there are still some income requirements to those that you may not even meet. So when it's all said and done, the asset-based financing, cash out refinance situations, you have I wouldn't even go as far as saying that wouldn't work because of what you have credit-wise. So if you're looking for a form of unsecured financing without having to put a huge fat cash down payment like you just mentioned here, and you'd rather build your way up, then it looks like one of those situations where it would be a form of one of those cash advance products. And I know that's like a red flag to a lot of people, but it isn't. You have to start with something and build up. And so what I work with people on is, well, you don't have business credit established. They won't even approve you for an SBA in this case with the revenues there. 2 years, maybe not more than enough time. But what I'm seeing is it's going to be a hybrid cash advance. which gives you a lot more flexibility. As I said, usually 50% less expensive, but by no means is it going to get you into the range you're looking for. You're not even going to get close to. Honestly, with that, I'm trying to make sense of the average daily bank balances because of what you're saying with loans monthly. But you said again, it's around an estimate, so it's a little gargantuan. So it could be that you have lower months, and it could be that you had a higher month like 6 months ago, and it could have been you had one of your lowest months recently in the last 3 months. So we're basing it off of those things as well, and it won't get you, if you're not fluctuating, if you are consistent depositing and you're doing that, you're upward trajectory, then perhaps we could get you over the halfway mark, but getting you into that range unsecured. And when we talk about secured financing, I'm speaking about, do you have enough to match the amount you're looking for? So do you have enough of a real estate property at about that amount you're seeking? Or what happens is you take one of these advances, or you take one of these other products, if you can mesh a couple too. Right now it looks like only one, and then you add that. I know where you're getting to. But if I had to work with someone like that, would I be trusted? You have your answer. So I cannot. I know people that way, but I don't partner or help with them. No, that's not ethical. So yeah, that's just the reality, Baron. It's like, I'm not gonna give your details away, but it's because this is between you and I. But we're speaking about what you could potentially get lent up to. So if I'm doing some, I already have the numbers in my head, but I want to add a couple of them right here. So you get 10 to 15% if everything looks good. I mean, usually you get between, on a monthly level, we're looking at monthly revenue products. In this case, instead of just monthly sales, we're looking at your overall monthly revenue because of how you're depositing, as well as your credit is an issue. So when that's considered, we have to say we can get you possibly between 75% to 200% of your average, or your monthly revenue, I should say. And usually it's your lowest month that we take. You could be projecting high, but when it's a 3-month sample, we say, hey, this is the amount you can get. Now, if you were to get, you kind of have an idea now what you could get. Where does that huge down payment come into play? Well, can we do that? Maybe there's a different service that we look at. Or maybe you wouldn't be sufficient because you'd have to put down a huge down payment. I don't want you to have to spend that much and then take out a home equity line of credit just to get what you want. 401k, if that's still available. Like, I have business owners who do that all the time. Think about those alternatives, and I go, no. What you should do, if you have multitude of uses, like you said, payroll, expanding, and a few other things. Well, yeah, unless with the down payment and real estate and collateral. I mean, that's your way of going at things, is asset-based financing, where it's not so much of a credit issue. It's more about what kind of properties, what could we inject, what equity is available. If that's the route you want to go towards, that could be open. But if we're speaking about unsecured, like, you'd want to realistically be doing a lot more than what you're asking for, like millions plus, to be asking for that amount. Like I said, if you don't want to start off with something, that's up to you. You have multitude of uses. If you could use like what you could start with and say, hey, I'm going to use this for payroll. I'm going to use this for, I have a small project. I have to get some supplies, get ready for my next time around. And you build up. So you start from here, you get to another amount. But there are business owners who go, no, I needed this amount next month, all of it. Well, okay, good luck. You don't want to offer collateral? Well, okay. You don't have sufficient enough of it? Well, I have set you the expectations, and there's more information I give you on this, by the way. So a lot of people get frustrated and they go trying to look for something that doesn't exist. I'm gonna be very honest with you. I just had a lady, she's telling me she has 3 offers, and we just declined her because of credit issues. But I have offers. Who you're working with, she's telling me who I'm working with isn't good. I'm like, what? No, there's a difference between getting an offer and getting funded. Like, there's more closing underwriting that we have to look at. So I don't care if you have those offers. What matters is if they're going to get funded. It's different. So she'll come to a realization. But we'll see what happens there. I mean, you have to be honest with yourself. Like, the difference is, you could be doing $1 million, you could be doing 900, 800, 7,000 and above, but you're looking for less and you think that's enough. Well, what happens if you take that huge of a payment and we're asking you to pay back like 600,000, 550,000, and we don't give you the exact time you want? Sure, you'll say you can pay it back, but that's so high of a risk. That is crazy. We'd have to have a longer term to be able to be sure about that. So I have all these details, and I'll send them to you. You'll see it. You'll see it in the questionnaire. If you're questioning it now, which you should, I'll show you in the questionnaire. There'll be no more questions asked. And so I'm that certain about what I do, so that when you see the questionnaire form and you're not happy about it, I'm giving you all the options. These are the lenders, these are the brokerages, this is the best way to do this one. Here's how to combine this one with this one. Here's probably what it would come out to, what you could probably get up to. Here are the tips and strategies on what I would do. But everybody's so fixated on, well, I just need it. If I don't get it all, then I don't want any of it. There's a deeper underlying issue. Why is that? Oh, because I have a huge project that I actually need that amount all at once. Okay, makes sense. What's the deadline on this? All right, makes sense. We can't do it twice. We can't come back in 3 months, if in about 90 days, and try to give you more funds to get you that second amount. You're not going to be quite where you want to be. Well, it's also more than that. You're probably thinking the rates. You're probably thinking, well, I don't want to pay 19 to... And with your credit, with that being said and done, and the revenue is not what we would want to be considered a B or an A tier paper lending client. The reality is, these rates, if we're looking at those types of products, unless we're doing like asset-based financing, cash out refinances, and a few other scenarios combined, then you're looking at those 30 to 40, 30 to 50% interest types of products. Like, this isn't anything new, everybody. Like, when I educate everybody on the subject, I go deeply into the underwriting of each product. Like, I had a lady the other day, and I'll conclude here in a bit. I have to get going. She has already an advance, a cash advance. She's probably paying a high amount. She's looking for another one so she can lower her rate. I communicated this. You cannot get a lower rate just because you're getting a second position, or just because you prove that you can make the payments, that we should give you a lower rate. We should give you more, get you better terms. A lot of people come to me with that expectation. That doesn't necessarily turn out. How much of a balance do you have remaining on your first and second, third position? We're coming in on the fourth position. And you expect us to take a daily or a weekly payment you're on to a monthly like that? How can we come on top of more debt with a monthly lender who's going to say, why should we add more when they can't even pay us or pay them? Or they are paying them. However, we can't take that high risk. We're just going to flood them in more debt, less cash flow. But because they have projects, they have less remaining in the bank to pay somebody back. So a lot of people like to point out and say, you're the bad guy. I'm not. You should be looking at the reflection of yourself and thinking, how can I change my beliefs about how this actually works? Because I've been there. I received funding myself when I had no money. I worked hard for what I had to do. And I'm not saying nobody else has. That's not what I'm saying. You just have to start and progress. I have business owners right now who have these daily/weekly repayments. We pay them off with a monthly lender. They're eligible. They raised their credit score. They even showed me that they raised it. I'm like, you went from about a 600 to about a 680, 690. You've already been proven to pay these. You have over 50% of the balance. Okay, that'll be done in 2 months. Well, then we can come in when you have a first position or there's no position. And our monthly lender can then come in, boom, and then give you probably double the amount you received. Good question. What about startup funding? How to get it when you're absolutely at zero with everything? Well, there's going to be some annual revenue requirement like taxes, personal tax returns, pay stubs, and a few other things. However, if you're looking for it to use for business, your credit has to be high enough. you're going to be doing 680, 700 and above, reporting 5 about trade lines, 5 of those. And there's quite a bit more. So startup funding isn't necessarily going to be like a private lender. Yeah. If you're looking for, even if you're looking for that amount, like you're not even proven. Like how do we trust somebody giving us back our money? They don't have a proven revenue-based business. And again, like I said, personal loans, those are available. Personal loans / startup loans work in a similar sense. And then there are the other way I recommend. This is the number one, actually, over this option. Credit card stacking with the credit line hybrid. This is one that you may want to look into because you're doing construction and real estate. And I have a lot of real estate investors, developers, construction workers. And they're all in this program where you can get access to multiple credit cards, business credit cards. And then you can start stacking up, adding more limits. But again, you'd have to work on your credit. Consumer credit. That's what it's based upon. Personal / startup loans, credit line hybrid. That's a heavy credits based program, commercial, consumer credit. So those credit bureaus have to look clean. You guys are probably like, wow, this is like nothing. Well, don't be upset. This is logical. How would I ever give you my money? Why should I give you my money? If I knew you personally, even if I didn't know you personally well, how do you expect me to give you my money? Why should I go to my cousin who wants me to loan them my money, loan them about 20 to 30,000? Just because emotionally it sounded good? Or is it because maybe they do have a startup plan? Maybe we'll start off with the guarantor first. It's not because of that. There's more to because of the ROI. That's part of it. You can tell me all day long that I'm going to be making this percentage and I'm going to be at this amount. And you can tell me that, okay, there's another business that has done the same, so I'm going to be doing the same too. But you see how we're getting caught up in the world of assuming and assumptions? So, like I said, the personal / startup loan, it's looked at different. And then you have the credit line hybrid program that I help a lot of people in. Those are the 2, 3. And then there are more. You can look at crowdfunding. I can go on forever, grants. But those are what are available. And you can always add a combination of them. It's just a question of if you're going to do it. So yeah, when people come to me and they tell me, oh yeah, because I have an ROI, they're like, but I don't have a business plan yet. Or they go, I have a business plan, so this is what's going to happen. You can talk to me about your business plan, and it can sound so good. And I go, even I would give you that money, but it's such a high risk. Like somewhere in between here, something will happen. And then you're going to ask the lender, can you help defer my payments? Can you maybe drop this? I had a family reason. And they don't want to hear I don't want to hear all that. Like our lender, you may have strong enough of a relationship with where they may be able to, there's circumstances. But if it's not strong, you're expecting us to give you the world. Like angel investors will probably want to do that, but they're going to want to take a share in your company. That may be another route to take. Private equity, hedge funds, venture capitalists. Now we're going a little bit too high there. We're talking startup funding. So I'll leave it at that. And I get you. I've been there. Yeah, I can see a lot of legal issues. See, that's what we want to avoid. But I hear you. Yeah, I don't want to be the bad guys here. Like, I don't want to be that person. I'm just trying to help you guys understand, like, what I know very well. It's going to happen. But when somebody comes to me, like I told you, the guy who's acquiring a business, like, wow, like, we are able to adjust. He has a high enough of a down payment for getting him the amount he's looking for, about $600,000. So, wow, everything all considered, we can help him with it. More than that. Oh, do you mean as in, okay. No. I don't like getting into numbers, by the way. For those of you who question what I'm doing, I like to keep that to myself. I don't talk about how much sales I've been generating. Just know that I do. I won't talk about what my revenue is per month. I'm not going to get into that subject. That's just me. And a lot of people are kind of the same way. And I'm not hiding anything, by the way. It's just I don't like that whole... It's different when I'm asking you guys about business funding, where I have to ask that question. But I'm not going to get into, okay, I'm earning this and I'm doing that. I don't even speak about that with family. Like mom, dad, and them. They know what I'm doing. Like they know how much and stuff like that. It's just I would rather not. That's just my thing. I grew up that way. I don't know about you, but I grew up not having to reveal that kind of information. I have aunts who are kind of the word they call presumido. So it's kind of like they don't mind saying it, but they try to show it as a way of authority. And I go, well, okay, you shouldn't have said that. Could have kept it to yourself. But I won't go too far into the subject. I just don't want to give that information. Just know that I am a trusted source and I get it done. Oh, sorry I didn't say hi earlier, Elaine. But I did see you. And I'll look out for your email. I know it's in there. It's just I got to get through it. See, that's a broad topic because it depends on the grant. Like right now I have a business owner who went through one of them with Hello Skip answering about 20 or so questions. And I've been through that. It's been a pushed out process, but when you get a response back, that is still uncertain too. So you have to be careful about when you apply for grants because you won't always hear back from them right away. So I'm not just going to single one grant out, but just know that when it comes to setting it up, every single one of them is different. But if you're speaking about how to set your restaurant up, that's a different topic. And so it's not like one specific grant is, yeah, there's the restaurant revitalization fund. You can say that. But when we're talking about grants in general, there are more that can apply to a restaurant. All types. Like I get these questions all the time and I'm just going to, for today's video, I'm going to keep them short because there are a lot of them. Another day, another day, and I apologize. Another day I would have been like, it's Friday. Let's just try to keep it low today. Save my energy for the evening. Otherwise, I'm going to be laying in bed all day again like I did yesterday. But all types. I'll tell you. I'll tell you guys this. If you're here still watching, for those of you who heard, like, what am I making? I don't like that subject. I honestly do not like to talk about. Oh no, no worries. Keep asking away. I don't like talking about what I make. Like when people ask me that, like, how much did you make in sales? Like maybe I'll be more open, but what are you taking home? What are you making? I don't want to talk about that. I'm doing good for myself. It's not about the money for me. For me, it's the value, and I know my stuff well. But I could tell you that I've lost with certain types of products, not all types, and I always get a lot. So it could be with one specific product over the other. I can tell you that I've lost maybe over 500 to 600,000 in the last 1 to 2 or so months, and I know that's quite a bit, and it's because of a product. Somebody they knew the information, they just didn't want to progress with it for their own reasons. They just wanted to see something. They knew what they were going to get coming in, but it's just the way that product works. So could I have said, yeah, that could have raised my revenue by another, I don't want to say the amount. It's just you win some, you lose some, and then they'll come back later on and so forth. It's just the nature of certain services. So about 2 more minutes. Like, if you just joined in lane 2, I know you were here for a little bit, but you were seeing the conversation I had with this gentleman. I don't know if he's still in here, but that's an example of having the wrong expectations. You want a lot of money, however, you can't back that up with cash flow. You have a down payment, you have collateral, okay, we were probably speaking something different. But if you don't want to do that, or you don't have it, or you don't want any of it at all, like, well, what were you expecting? You were expecting to get your 500, 600,000 you wanted? That's not going to happen. How do we justify that? About 1 more minute. All right, guys. Appreciate you for tuning in. Thank you. Please have a great Labor Day weekend. I will see you guys next week. Have a safe and secure weekend as well. And again, talk to you all soon.